Information presented on this program and by its guest is believed to be factual and up-to-date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information and may not be suitable for members of the listening audience. A professional advisor, attorney, or tax professional should be consulted before implementing any of the strategies presented.
Are you retired or getting close? Welcome to Retirement Lifestyles with Patrick McNally, where it's all about having the health, wealth, and freedom you need to live your dream retirement. Are there challenges on the way? You bet. Inflation, the economy, and the ups and downs of today's markets will try to rob you of your dreams. But take heart and take notes, because what you're about to learn will put you on the winning side of life for the rest of your life. Now, here's the host of Retirement Lifestyles, Patrick McNally.
Good morning, Reading. Good morning to the North State. Welcome to Retirement Lifestyles. This is the show where it's all about having the health, the wealth, and the freedom to live your dream retirement. I am your host, Patrick McNally. With me, as always, my friend, fellow financial advisor, Mr. Rick Comerick. Now, Rick, when I came in the studio this morning, why was there like a campfire and a sleeping bag next to the pinball machine? How early did you get in?
I might have been here for a while. No, it's fun times. I think it's one of the owners or workers here fixes them up and repairs them and uses them. So from time to time, they show up here at the radio station, and we get to enjoy them.
I mean, it was like 2-3 years ago.
Yeah.
When we had like 4 or 5.
Oh, there was a whole row of them.
It was like an arcade.
Yeah, totally.
I think we lived here.
Yeah.
Like they're like, wait, you do a show on Saturday? It's Monday morning. Why are you here?
Right.
It was crazy.
Oh, so much fun.
Oh, we love that fun. The fun
Yep.
old school stuff like an
Yep.
arcade, right?
Yep.
Hey, let's talk about what we're going to talk about on the show today, Rick. You want to do that? We're going to talk about taxes in the first half. We're coming up. It's tax season. Everybody knows that. We're coming
Right.
up on that date when you got to get it done.
Right in the thick of it. Everybody's getting their documents together. The early birds have already got their taxes done. And the rest of us are trying to get everything ready to get ours done.
So what is better than having like a checklist to make sure that we get everything done? So that's what we're going to talk about. We're going to talk about what documents you need to
Right.
file your 24 return. And we're going to walk through a checklist that you and I have that we've given to our clients. We talk about and maybe help people who are, kind of like scrambling to like make sure exactly what they need for their tax preparer.
Right. Yep.
And then in the second half of the show, we're going to get into some specifics on a unique strategy
Right.
used by a lot of higher income earners with their retirement accounts, like IRAs and Roth IRAs. So we're gonna visit that topic and give some tips, maybe some things that they can do. A lot of people out there maybe feel like they can't put money into those accounts.
Yeah, because there's income limits, and they may be phased out of doing certain things, but there's always a way, and we're going to talk about the way today.
Absolutely. Now, before we go to a break, though, I want to give a shout-out to Dr. Todd Royce.
Okay.
Dr. Todd's been he's been a sponsor of our radio, the show since the beginning. And Chiropractic First. And you've heard if you've listened to this show before, you've heard our ads with Dr. Todd. But he's got a really cool class coming up, an exercise talk. I want to make sure that I get the name of it right. It's called Adjust Your Life. Let me just pull it up real quick. Adjust Your Life talk series with Dr. Todd. Make 2025 your healthiest year yet. And I'm going to give a couple of the quick bullet points. It's March 11th, so if you're looking at your calendar there, March 11th from 5:30 to 6:30 p.m. He's going to talk about how to safely exercise all the way into your 80s, 90s, and beyond, and how to know how little is too little and how much is too much when it comes to exercise, how to pick a gym, the main reason people get bored at the gym and how to overcome that, how to make it fun. So a big exercise class, Rick.
Oh, I love it. That's great topics.
Yeah, and it's a live class. Dr. Todd, I'm sure it's going to be at Chiropractic First. And if you have more questions about that, reach out to Chiropractic First and right downtown in Reading, and they can help you out. So, hey, don't go anywhere. You know what to do next. Get your notepad out because we'll be back here in 2 minutes.
Listening to Retirement Lifestyles with Patrick McNally.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. all the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. Are you one of the 77 million baby boomers ready to claim what's rightfully yours? That's right. I'm talking about Social Security. You paid into the system for 40 years or more, and now it's time to collect. If you're like most people, you may have some questions or even feel overwhelmed and confused. After all, the claiming strategies vary, and choosing the wrong one could end up costing you hundreds of thousands over a full retirement. And the worst part is, you may not even know what choices you're missing. If you want to maximize your benefits and feel confident in the decision you make, let my team run a Social Security benefits analysis for you. We'll show you multiple strategies so that you can make the best decision for you and your family. For more information and to request your own Social Security analysis, visit patrickmcnally.com. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. Rick, it's tax season.
Absolutely, and it's a time to gather up all of your documents that you've stuffed in a shoebox.
No more procrastinating.
Right,
Get your stuff in a shoebox. My dad still does that.
Wow. Okay.
Collects receipts and stuff throughout the year.
Yeah.
And I'm like, don't send that to your CPA.
Right.
Don't do that.
Yeah.
Don't do that. So we've had to kind of along the way, we've had to teach him that, you can just log into your bank. You can go online and see all,
Right. All the transactions are there.
There's a brand new invention, Rick, called QuickBooks.
Right.
Just came out.
Right.
Track all those expenses.
Yeah.
Now we're teasing. That's once you get locked into doing it your way, you can do it your way.
Right.
And actually, for people who still do it that way with the receipts and the paperwork, this would actually be a great checklist to have.
Yeah, make sure
you got it all.
That's right. Absolutely.
So what we're going to talk about, guys, is what documents do you need to collect for filing your 2024 tax return. And if there's like, Rick, I didn't even count how many bullet points are actually on this checklist. There's probably about 50 of them.
Right.
To help you make sure that you have everything. That's what it's all about. And I want to say this, too. If you want a copy of this, I'd be happy to send it to you. It's a great checklist. You can call the station here, 221-1402. 221-1402. Give Kelly a little bit of info, including your email, and I'll email it to you right after the show, and you can have it. But, Rick, let's walk through this. Let's talk about income. So one question you can be asking yourself is, did you earn wages as an employee? And if so, you're going to get a W-2. So you want to make sure that you receive that in the mail, including all the copies and making sure it's showing all the boxes, the states and localities, all that stuff. Rick, what else you got on here?
So if you don't receive an income as an employee, but rather are self-employed, then what you'll want to do is gather up all your 1099 non-employee compensation or 1099 miscellaneous or whichever 1099Ks, whichever 1099s you get from your various vendors and things.
There's like 50 different 1099s.
Right, there are a lot of them.
If you look at them all, they all have like little initials after the back, and that kind of tells you what it's about. But it's like most people, they'll get the 1099 miscellaneous, or maybe what else are they going to get? They'll get like a interest or dividend.
Yeah, that would be from your banks typically or your financial institutions. That doesn't have to do with self-employed, but you're right. That's the next one.
I jumped ahead, I jumped ahead on you.
You'll want to look out for is those 1099 interest and dividends, and sometimes they do a 1099 consolidated, which has all that information on it. With that one, I will say that I believe the financial institutions don't produce those if it has $10 or less of interest and dividends.
Okay.
So, some people may be wondering, where is it? I've never seen it. Well, if your account's not that big and you're not getting that much interest, then you probably don't have one.
Yeah, if you're thinking about banks, you could have like $4 million in the bank and get $10 of interest on what they pay typically.
Right, exactly.
They're actually paying okay. I'm just kind of joking, but
no, but some bank, you're right. Some bank interest is still quite low, and so if it's under that threshold, then don't worry about it. You're not going to get a 1099 for that.
You didn't receive it.
Right. Yep.
Now, there's also this thing called corrected 1099s. Rick. What happens with that? Because people get all in a hurry when they want to get their 1099s, but sometimes institutions issue a corrected 1099 2 to 3 weeks later.
Right.
And then sometimes people, they've already got their tax returns done. They're like, hey, why did I receive this in the mail?
Right, yeah. And that has to do with the fact that some information, isn't ready in time. It's not necessarily that there's errors per se. It's just that the deadlines to issue the 1099s are so short and so fast that the financial institutions have to issue them, but they don't necessarily have all the reporting from all the companies that are reported on the 1099. So once they get that, then they have to update it and issue that corrected 1099.
I always think it's so interesting when we get through the holidays, we get through the new year, we get through all of that, and it's like January 9th. I got people going, hey, I got to get my taxes done. What do
right.
I do it all on my forms. I'm like,
right.
Dude, I haven't even woken up from New Year's. What are you talking about? You want to get your taxes done.
Right.
Man, and then I think most of these institutions have till the end of January, isn't it? To get it done. No, it's end of February.
February I think is the
end of January is if you're the business, you got to send them out.
To send them out. Yeah, we'll have to check. We're not tax preparers, so we don't know.
That's why we have them on our team.
Right.
We're the investment guys. We know enough to be dangerous about the taxes.
Yeah.
But I just think it's so interesting because at the end of the day, they might correct these things, and you could get this all done, and then have to call your tax preparer again, and then they may charge you even more money to correct your
amend
tax
it
return or amend it.
Correct it. Yeah.
All right. The next one is what? Talking about retirement accounts. Did you take any withdrawals or retire from your retirement plans?
Yeah, that's one of the most popular ones that we see with our clients in the world of retirement planning. And there's the 1099-R. If there was a rollover or a Roth conversion or just a straightforward RMD or distribution, you could have a 1099-R, and it may or may not be taxable. Also, with qualified charitable distributions, we talk about sometimes. They issue 1099-Rs, but what you need to know is that if that, in fact, was part of your qualified charitable distribution, it's not taxable. So be sure to communicate that to your tax preparer because there's no such thing as like a 1099 QCD or something like that.
There should be a checkbox, though, right, Rick? And that's because a lot of people, we've been doing this for so long, there's always at least one or two, we get a call, and they're like, hey, I got a 1099 for like $480,000.
Right.
It's like, well, no, it's a 1099-R, right? Is the box checked there? I think it's number 7, right? That's a rollover.
Could be, for the rollover, which would be a
little checkbox right there that tells you exactly why you're receiving that 1099.
Right.
It's not necessarily a distribution, so
right.
don't freak out and think that you owe taxes on the entire amount. It's just showing the IRS,
right.
What did you do?
Right.
Oh, you moved it from one place to another. Yeah, they got eyes on you, man. They want to know where that money's moving.
That's right. They do. They have an interest.
They're a vested partner.
They are a vested partner, and they want to get theirs when it comes due, so they're going to keep track of where that money is and what the value of it is each and every year, which kind of reminds me of another point, which is Form 5498. These come out in May, and they report the value, the fair market value of your IRA and contributions and things like that. And a lot of times people wonder, I need to file my 5498, or I got this in the mail, or I see there's one on my portal that under tax forms that says 5498. You don't have to file that. It's basically for information purposes for you.
That's the one. Now, you might have said this. I just didn't hear you. Is that the one that shows you what your next RMD is going to be?
It could, because it is the prior. It won't tell you the amount, but it tells you the prior year balance kind of thing.
Okay.
But it also puts on there contributions that were made in the year. And that's why it comes out in May, because sometimes people contribute in April, for the prior year.
Yeah, that's right.
So it'll document what your contributions are.
So it's more of a summary page, kind of what happened in 2024, the previous year, and that kind of good stuff. Okay. Hey, we got to go to a quick break. Like I said before, though, if you want a copy of this, this may not all pertain to you. You go through this and be like, there's one checkbox. Okay, 5 checkboxes out of 50 on this thing. It's designed to just kind of help spur your memory and make sure that you did everything correct and you're getting everything to your tax preparer. During the break here, I want you to grab your phone and call Kelly here, 221-1402, 221-1402. Just give him your name, a good email address, and I will send this out right after the show, and we'll be back here in about 2 minutes.
Don't touch that dial. Patrick will be right back.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. All the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. You've heard me say it's all about having the health, wealth, and freedoms you need to live your dream retirement. When it comes to the health side, I want to tell you about my family's personal chiropractor, Dr. Todd Royce, owner of Chiropractic First. Not only does he adjust us and get us back to our active lives, he teaches us about ongoing nutrition and living healthier. If you have any pain or stiffness in your back or neck, I want you to call Chiropractic First today at 243-0889. Mention Patrick for a free consultation. You don't need to live with pain or discomfort anymore. Call Dr. Todd at 243-0889. Or visit online at chirofirst.net. Patrick McNally here, owner of Retirement Lifestyles Advisors. I want to take a couple of seconds and talk to you about annuities. Depending on what you've heard, annuities can be good or bad. In my opinion, it all depends on what kind of income you want. Do you want a guaranteed pension income that will never run out as long as you live and isn't affected by the stock market? Well, an annuity might be good for you. Do you want an income stream that will continue on to your spouse if you check out on life before they do? An annuity might be right for you. But you need to be careful. There are some insurance people out there who don't have your best interest at heart. That's why you should talk with an income planning specialist that can answer your questions and discuss all of the pros and cons of annuities. I'm here to help. Visit patrickmcnally.com to schedule a free, no-obligation strategy phone call. Go now to patrickmcnally.com. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. Hey, if you're just joining us, this is Retirement Lifestyles. I am your host, Patrick McNally, with me, Mr. Rick Comerick. And if you got questions about your retirement, if you're getting close to retirement, or you got questions about Social Security, Medicare, all that good stuff, we'd love to talk to you. I want you to visit patrickmcnally.com. That's patrickmcnally.com. You can reach out to us and love to answer any questions that you have. Right now we're talking about taxes. It's tax time again. Nobody loves tax time, Rick.
Right. We all love to hate taxes.
But you got to do it, and you got to get all of your paperwork and your stuff together. So that's what we're talking about, going through a little checklist that we have called What Documents Do I Need to Collect for Filing My Return? And if you want a copy of it, call the show, 221-1402, and we'll send you one. We got through some of the income, Rick. We talked about 1099s, W-2s, some of that stuff that you should expect to get in the mail to show what income you made. Let's get into some stuff, a little funner stuff, like what can you deduct to reduce your taxes?
Right.
Now, if you're self-employed, what you need to be basically doing is gathering all documentation of any of your deductible business expenses, including home office use, vehicle use, health insurance, long-term care, etc. You might have all kinds of deductions and expenses in your business. Your CPA, somebody that you're working with, should basically give you a list of stuff that you could potentially deduct. And then, obviously, that brings down your taxable income. Everybody's happy about that.
Absolutely. And, you know, with that home office use, I think it was several years ago, the IRS made a simplified home office use option. So there's been some improvements in that area and things. So that's a good thing.
And I made a little joke about this earlier about my dad. My dad's a great sport. I can joke about Dad. He knows I talk about him on the radio.
Yeah.
But, basically the joke was, hey, maybe using a software program like a QuickBooks or something like that to help organize all of your stuff.
Yeah.
And, you go in like once a month
Right.
And just make sure all the stuff is up to date and all that. And at the end of the year, that's what you can give your
Right.
tax person.
Yeah.
Make their life a lot easier, make your life a lot easier, and you're not going through a box of receipts
Exactly.
and paperwork and all
Yeah.
that stuff.
Right,
So I
right.
would check it out. I mean, QuickBooks
Yeah.
is like a couple $100 a year.
Right.
For a subscription.
Could
Anyway,
save you a big
I'm not
headache.
being paid by QuickBooks to say
Right.
that. I'm a user of QuickBooks. That's what I can say. But
Yeah.
Anyway, Rick, what else can we go to under deductions?
Well, one of the best ways that, most tax preparers will tell you if you want to lower your taxable income is to contribute to a retirement plan. A lot of times this time of year, I have clients calling me say, hey, my CPA said I need to put $5,000 into an IRA, or I need to put $8,000 into an IRA, whatever the case may be on that. And so that's because it's one of the only areas of the tax code I'm aware of that you can do it retroactively. Mm-hmm. In other words, right now, you can contribute for the prior year. You can go back in time, take a time machine back, and contribute for 2024, even though 2024 is done.
A lot of people don't know that. And actually, it's the opposite of what we kind of talked about in income.
Yeah.
You can't take your RMD right now for last year.
No.
You're gonna get, you can, but you're going to get penalized for doing it.
That's right.
But it is a great thing to mention, because a lot of people, they do exactly that. They're like, oh, I already passed. They think that they passed December 31st and they can't do it.
Right.
Not true.
Yeah, not true as it pertains to retirement accounts. So you can contribute for 2024. And, of course, we're in 2025, so you can contribute for this year as well if you want to. So make those retirement plan contributions.
Now, Rick, what about qualifying charities? A lot of people want to do donations. They want to do stuff like that. Is that something that we can deduct, we can do stuff, we can add that in?
Absolutely, but unlike the retirement plan contributions, there's no after the fact, so you have to have done that last year by December 31st.
Got it.
So gather up all your records regarding that. I think they want to see itemized receipts if it's more than like $250, something like that. I'm just
like
pulling that off.
Like if you drop off stuff at Goodwill, that's why I always ask you, do you need a receipt for that?
Exactly.
And it's got lines on it where you can write in everything. If you think that what you donated, is it $250?
Something like that. Yeah, that's just a guesstimate on my part. So definitely confirm with your tax preparer.
Yeah.
It's not that you file the itemized receipt with the IRS, but you have it just in case you need to.
And we got medical expenses. If you had any significant amount of those types of expenses, you're going to want to gather up any relevant details, amounts paid, insurance, HSA reimbursements, etc. But be mindful of some limitations, right, Rick? Like there's like percentages where you can only like maximum limits that you can write off. Yeah,
you have to have more than 7.5% of basically your gross income of an expense to be able to write it off. So if that amount of expense that you have is 7.5% or less than your total income, then you're not going to be able to use it. Basically, they don't allow you to use that first 7.5% of expenses.
And then, did you pay interest on a mortgage, home equity loan, or home equity line of credit?
Yep. We've got caps on that at $10,000 currently still. So some people may be capped out on that, but definitely record that.
Definitely record it and decide whether or not, because that would be an itemized deduction versus the standard deduction, correct?
Right.
A lot of people, they always talk about writing off your mortgage interest and all that, and it's like, well, you can't do both.
You can't do both. However, in my experience here in California, is even though the standard deduction might be so large that you're not itemizing, on the California tax form, you still may be able to itemize because it's not quite the same as federal. So keep that in mind too.
Okay, no, that's a great tip.
I personally use that. Yeah.
Okay, so interesting. All right. Good stuff there. Hey, we got to go to a hard break. We're at the halfway mark. Again, if you want a copy of this checklist, I want you to call Kelly at 221-1402, 221-1402 during the break, and we'll get it out to you as soon as possible. Back in a few minutes. Hey, guys, we're at the halfway point of the show, and this is when I want to tell you about my updated 2025 planning checklist. I'm sure you know that retirement involves a lot more paperwork and deadlines than most people realize. These checklists give you the guidance you need on taxes, Social Security, Medicare, retirement account distributions, year-end tasks, and more. It compiles multiple deadlines and tasks in a simple-to-read format to help you see at a glance what needs to be done and when. The checklists include key financial and tax data, the retirement calendar checklist, key planning and investment deadlines, the Medicare quick reference guide, and much more. As a thank you for listening to the show, I put all of these into a bundle that you can download
for free. That's right. No cost, no obligation. Simply visit patrickmcnally.com and click on the 2025 Checklist Bundle. That website again is patrickmcnally.com. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. This is Retirement Lifestyles. I'm your host, Patrick McNally. We're halfway through the show, having fun. If you missed any of that first part, we were talking about how to get organized for taxes and what documents do you need, and we've got a checklist for that. Just want to keep mentioning it during the show because we're giving it away, but you got to call in to get it. 221-1402 is the number here. 221-1402. It's a 2-page document checklist, making sure that you have all the stuff you need for your tax preparer, since after all, it's tax season. But we are going to go into another segment here where Rick's going to talk about the markets. Before we do, though, I want to mention Dr. Todd Royce, Chiropractic First. He's putting on a talk. Let me just bring it up here real quick. He's putting on a talk on the 11th, March 11th. It's called Exercise Simplified. And part of a kind of a series he's been doing on different areas. And this one's going to be on exercise, discovering how to make movement a natural part of your day. And actually, there's no gym required. So he's going to go through a lot of stuff, and I will mention a few of them. How to safely exercise well into your 80s and 90s. Exercising for no cost or very low cost. If you want a gym, how to pick one. All kinds of stuff like that. Just reach out to Chiropractic First. Or just give them a call at the office. They can tell you about it. But it's on March 11th from 5:30 to 6:30 p.m. Rick, take it away.
All right, let's break down this week's market action for you. It was a tough week on Wall Street with major stock indexes taking a significant hit. We saw declines ranging from about 2 to 4% across the board. The main culprits, worries about economic growth and ongoing trade tensions. So new tariffs on our neighbors and overseas trading partners have investors on edge. There's concern that these tariffs could drive up prices, potentially putting damper on consumer spending. This week's economic reports didn't help ease those worries either. We saw mixed signals from various sectors, with manufacturing showing some signs of slowing down, while the services sector actually picked up a bit. The jobs report released on Friday was, lukewarm at best, but it wasn't terrible either. Looking at different areas of the market, almost every sector took a hit this week. Financial and consumer-related companies were among the hardest hit. Only healthcare managed to eke out a small gain. So, for those of us that are watching our retirement portfolios, it's a good time to remember that, we've got a long-term perspective, and a 2 to 4% decline for the week, although isn't fun, it also isn't going to make or break your retirement. And it's really that long-term investment strategy that gives you the opportunity for long-term growth.
Let's continue with that long-term investment strategy. I want you to get your crystal ball out.
Yep.
And talk about, do you think it's going to be is it going to continue to be a roller coaster year? I've been having thoughts about this, obviously, with what Trump's doing, what Doge is doing with a lot of those things. Completely agree with what they're doing. Going in, cutting out waste, finding fraud, doing all the things. Agree 100%.
Right.
Don't you think is that the reason maybe that the markets are kind of volatile right now, kind of roller coastering, and do you think it's going to continue?
Yeah, this whole tariff issue is kind of uncharted territory for me. I don't have any, experience of it in the past.
You weren't around before 1913,
right? Nothing to. I wasn't there during the Taft-Hartley tariff, act, and so it's a little interesting to see what's going on. So far, to me, it seems that a lot of it is, political maneuvering versus, a financial impact. So I think investors just in general are kind of maybe jitter. Well, anytime there's uncertainty, that's when you get the volatility. So that's what we're seeing right now is some uncertainty and volatility. As far as my crystal ball, yeah, overall, I'm still optimistic about the country and growth, and absolutely, on board with cutting out any waste. I just see it absolutely horrendous that, government actors and bureaucrats can take tax dollars and then waste them. It just makes no sense to me.
Absolutely. I agree 100%. Now, would you agree that once we cut out a lot of this stuff, that's going to free up a lot of money for Americans to then do what? Invest.
Right, yeah.
Most people don't feel like they can do that. They're like, I'm pinched. I'm taxed to death. Prices are up. Inflation's up, all this stuff. I'm hoping once we can, the dust kind of settles from all this stuff, is that it's going to free up more money for people to actually invest back into the markets.
That's right, because there's really only, maybe three or four places your money can go, right? You can spend it, which is obviously going to help with economic activity. You can save/invest it, which will also help. Or you can give it to the tax man. And we don't want to do that. We want to keep your taxes as low as possible. That's why, we had the tax review in the first half of the show talking about that. And so if we can, eliminate some of this waste and get more of that money in our pockets, well, then we can spend it or invest it, or we can give it away to charitable organizations to do the things that we want to do, to have happen the way we want to see it happen. And anytime we can have that more local charity where we're involved and we're actually a part of it, the more efficient and effective it will be than say, a charity that's happening across the world somewhere.
Right. Yeah, exactly. Yeah. I think some people also say they're like, well, if people are saving more, they're not going to spend more. I disagree with that. I think we spend anyway, no matter what. We've all got expenses that come every single month.
Right.
We have to pay.
Yeah.
You guys still got to buy food. So I don't like that argument. I think that when we have more money in our pocket, we're still going to spend. Might spend a little more, but hopefully people are going to save and invest, and I think that's just going to drive market growth back up.
Well, and think about savings. All it is deferred spending.
It's true.
You're still going to spend it. The theme of this show is retirement planning.
Right.
And so it's just deferred spending that you're going to do at a future point in time. So if you're able to save it now, that means that you'll be able to spend it later.
Now, what do you think about the whole thing with cryptocurrency XRP and Ripple? President coming out saying, hey, we're going to use this in our strategic reserves. The crypto, he's even having a crypto summit at the White House. Is that this, Kelly, did you hear about that? Is that this weekend or next week, the crypto summit? Have you heard about that?
Yeah, I have, but I'm not positive on when it is.
I know, he's literally he's like, hey, crypto people, come to my house.
Right.
Talk to me about what's going on. He is very bullish on crypto, and it's actually, I'm seeing it's starting to create conversations even with some of our clients. We've been talking, we brought it up the last couple of years with, the SEC and all that stuff with Bitcoin last year. But I'm actually having clients reach out to me now saying, okay, what's going on with this whole crypto thing?
Okay, interesting.
The word is getting out.
What's interesting is that by and large, it's of course, it's still very volatile in general, but it's taken a bit of a beating this year.
It has. It's unsure. It's
right.
like, okay, so is this going to hurt us? Is it going to help us?
Right. We saw that significant bump last year, around the election time.
Yeah.
And then this year we're seeing some kind of retracing of that. So, it's that uncertainty piece.
I think it's
mentioned.
That pruning piece.
Yeah.
I talk about this with clients all the time. I'm like, the markets, you got to think of it like a flower bed, a rose garden. Every once in a while, you got to prune that thing back so it can come back stronger, prettier, smell better.
Right.
It just goes through those cycles. But the whole crypto thing's a long-term play.
Yeah.
I think that what Ripple wants to do, obviously in the banking system, that's what's kind of interesting to me.
Oh yeah.
Is Ripple's whole goal in life is to replace the SWIFT system of exchanging payments and make it like a tenth of the cost.
Right.
Make it instantaneous instead of 4 days.
Right.
And a tenth of the cost. And I think more and more banks are jumping on. I think it's Wells Fargo that just jumped on the other day and was like, we're going to adopt this into our system. Yeah,
how could you not be on board with a system that's faster and less expensive?
Because you're the puppet master, with the Fed, and you're not going to get paid as much. That's how.
Yeah,
and I see that as a block. But I do see it. I am a fan of crypto. So I do see where this could potentially be something in the future. So if you guys got questions about that, you can call Rick and I. You can ask all about that, and we can help answer those to the best. I mean, this stuff, it changes all the time. Something new comes out. So it's constantly changing, but we can at least lay a foundation. And I would encourage you, do some reading. Get on the Googles. There's a billion places you can learn. What is cryptocurrency? What does this mean? How can I use this? And continue to educate yourself. When we come back, we're going to talk about how high earners can maximize their retirement savings. So don't go anywhere.
Smooth. You're listening to Retirement Lifestyles with Patrick McNally.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. All the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. You've heard me say it's all about having the health, wealth, and freedoms you need to live your dream retirement. When it comes to the health side, I want to tell you about my family's personal chiropractor, Dr. Todd Royce, owner of Chiropractic First. Not only does he adjust us and get us back to our active lives, he teaches us about ongoing nutrition and living healthier. If you have any pain or stiffness in your back or neck, I want you to call Chiropractic First today at 243-0889. Mention Patrick for a free consultation. You don't need to live with pain or discomfort anymore. Call Dr. Todd at 243-0889. Or visit online at chirofirst.net. Are you getting close to 65? If so, Medicare is right around the corner. And if it hasn't happened already, your mailbox is about to explode with Medicare information from insurance companies. Which company do you pick? What's Part A, Part B, Part C, Part D? Oh my gosh, how many parts are there? Is Medicare automatic? Is it free? Does it cover everything? These are just some of the questions we get all the time. If you want to cut through all the noise and learn the facts, visit patrickmcnally.com and download your free copy of my 2025 Quick Reference Guide to Medicare. You'll learn all about the costs, the enrollment periods, and so much more on this Medicare Reference Guide. Visit patrickmcnally.com today and request your free copy. That's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. This is Retirement Lifestyles, and during the breaks, Rick and I have some interesting conversations. We continued our talk about crypto.
The show between the show.
The show between the show. If we only recorded this by video and they saw what's going on.
Right.
They'd probably see you running out going to the pinball machine half the time.
Yeah, that's right.
To keep you in here, keep you on the straight. So anyway, yeah, I want to go back into crypto, but no, Rick, we're not going to. We'll kind of tease that a little bit. And I guess I was off a little bit. The whole crypto summit was yesterday.
Oh wow, okay.
So President Trump at the White House had a whole bunch of the major players of cryptocurrency, including XRP and then like the CEO of Ripple and all that. Those guys,
nice.
The big guys,
yeah,
over to his house for a little party. So it'll be interesting to kind of see that stuff will probably start flowing out on Instagram and Facebook and kind of what they talked about and went through and what's coming up.
Oh, that's good.
I am very interested in crypto. It is a long-term thing. I'm teaching I tell my kids, teach them about it. You got to learn crypto and AI.
Right.
So if you're out there and you're in your retirement years, go talk to your grandkids about this stuff and say, hey, learn about that. But you need to learn it yourself.
Yeah.
This stuff moves so fast. Rick, AI and all this stuff is changing.
Oh, yeah.
Daily.
On a daily basis, yeah.
It's crazy how quick it's changing.
Yeah.
That you at least got to have a working knowledge. I'm not saying you got to nerd out.
Right.
Like when Rick pulls out one of these tax form numbers, like 880275.73, pulls those things out of nowhere. And but you do at least need to have a working knowledge because this is going to just become more in the vocabulary.
Yeah.
And you need to know what they're talking about on the news when they're talking crypto. And don't just be one of those people that's like, turn it off. I don't want to hear about crypto.
Right.
Don't do that. Learn. Continue to learn and be educated. Rick, talk to us about how high-income earners can still maximize their retirement savings because a lot of them think they can't be putting money into some of these retirement accounts.
That's right, because there are contribution limits that the IRS sets, right? And those contribution limits have to do with the deductions that you can take for your IRAs and 401ks.
I call that a success penalty.
Right.
When you cap.
When you cap
how
out,
much you're allowed to save just because of how much you earn.
That's right. Yep. And so with the contribution limits that are in place, it depends on your age, first and foremost. Around $23,500 if you're under age 50 in a 401k. But what's interesting is that they increase it after you attain the age of 50. So you could contribute up to $31,000 into a 401k, and then there's a brand new brackets out there. Once you attain the age of 60 through 63, there's additional catch up at that point too. So, anyways, there's new limits that are in place. However, your employer can also contribute, but there's also an overall limit between you and your employer.
Right.
So, where do we go with this? Is that if you have hit one of those contribution limits for your deductible 401k, what you can do is add after-tax contributions to your 401k or IRA, as the case may be. I mean, they're both, different accounts that have different limits and all that. But what you could do is add an after-tax contribution. Now, why would you do that? You don't get a tax deduction for it, right? Well, the reason you would do it is because of our friend Roth, right? Roth is one of our favorite types of accounts.
I love Mr. Roth.
Roth is great guy. And
is.
Roth allows the money to grow tax-free and to be distributed tax-free. So if you make what's called an after-tax contribution to your 401k or IRA, you may be able to go ahead and then convert that to Roth for little to no tax because you've already paid the tax on it. And then you have, money in a Roth that you otherwise, may not be eligible to because of your income.
So that's the whole big piece. So you kind of walk through all the 401k and, the money that you earn at a job. But what if people they're just like, hey, I just want to open up a Roth IRA.
Right.
I know I can only put $8,000 into it. I'm over the age of 50.
Right.
But then you're like, well, how much do you earn? Well, they're like, we earn $350,000 a year. You can't put money into a Roth.
Yeah,
you can't do that. So that's what this is all about. You're going, okay. So you phase out. You make too much money, and the government's like, you're not allowed to save this money into these tax deferred vehicles and things like that. But this is a backdoor option to do that. You're saying a non-deductible. You can put that into a non-deductible IRA, and then maybe wait a week or whatnot, and then convert that to a Roth.
Exactly right, because there are no income limits on non-deductible and conversions both. Yeah. So years ago, I think there's like $100,000 income limit on conversions, but that's no longer the case. So some people remember that old rule.
Yeah.
You can convert as much as you want.
That was huge when that rule changed.
Yeah, exactly. Opened up the door to anybody can convert any amount they want.
Yeah.
And, it's really important to understand that although there are income limits on IRA and Roth IRA contributions, there is no income limit on an after-tax contribution. You can make as much as you want and still make that contribution.
So, Rick, when you said if it's a non-deductible contribution to an IRA,
right,
when you convert that to a Roth, it's not a taxable event?
Right, because you've already paid the tax on those after-tax dollars. Now,
that's an important point right there, because a lot of people are like, no, when you convert, you got to pay taxes.
Yeah, and there's a little nuance to it. Any interest or dividends that, haven't been taxed.
Sure, there's a calculation. Like in a week, you mean before you convert?
Yeah, exactly.
Because you're not going to do it it's not instantaneous.
Right.
I don't know of a form that says, right when you make the contribution, do the conversion.
Right.
No, there's going to be a little calculation. So we don't want to say that there's no tax, right?
Right.
Great point. Great point.
Exactly. There could be some, or maybe not. Maybe the account's dipped in value at that point.
But the point is the bulk of it could be potentially, and this could be a big deal for, and we got to go to a quick break, but I want to keep going with this. This could be a big deal for people who have had IRAs for years, been pumping money into this. Now they earn higher income than they did in the past.
Yep.
They've built up these big IRAs. They think they're kind of stuck with this, but then maybe they've been paying into these things with non-deductible contributions for 5 or 10 years because they can to keep it going.
Yep.
They don't know about this rule. Let's talk about that when we come back here in
Sounds
just a minute.
Don't touch that dial. Patrick will be right back.
Okay, guys, so we're taking a quick break, and I thought this would be a great time to invite you to join the Retirement Lifestyles Inner Circle. If you like listening to the radio show, you're going to love this. Each and every week, I'm going to email you all of our most updated financial planning tips and strategies right to your inbox. On top of that, whenever we create a new checklist or a guide, you'll be the first to get it. All the updated numbers for Social Security, Medicare, taxes, and more. You'll get previews of upcoming live radio shows and notifications of when we record new videos. Membership to the Inner Circle is free, so don't wait. Sign up today at patrickmcnally.com and get immediate access to our exclusive content. Visit patrickmcnally.com. That's patrickmcnally.com. Are you getting close to retiring and starting to feel overwhelmed with all of the choices you need to make? Social Security, Medicare, estate planning, taxes, rollovers, and investing, it seems like a giant maze, and you're about to go in. We can help you. Head on over to patrickmcnally.com and check out all of our reports, checklists, videos, downloadable guides, and flowcharts, all designed to get you prepared and to stay ahead of the game. You'll be so prepared to retire, it'll almost be unfair. Don't be surprised if your friends and neighbors start asking you for advice. Don't wait, the time is now. Go to patrickmcnally.com, that's patrickmcnally.com.
Welcome back to Retirement Lifestyles.
Welcome back to the show. If you're just joining us, well, you're only going to get us for about 6 minutes. Ha! So you need to go to patrickmcnally.com and or go on Spotify, go on iTunes, and look up the show there. And early next week, we'll have it uploaded, and you can listen to it again. But in the first half of the show, we talked about taxes, about how to get organized for that. We even have a checklist. And if you are just joining us and want a copy of that checklist, we'll pick up the phone right now while we're here at the station. 221-1402 is the number. 221-1402. And I'll email you a copy of that checklist for free, and it'll help get you organized to get all your taxes done. But then we transitioned into about how to potentially, if you're a higher income earner and you've been wanting to put money like into a Roth IRA, and you can't do it because you make too much money, is there a way to do that? And Rick, we want to keep going with this because the example of you make too much money, you maybe had an IRA you've been building up for years, okay? Let's say whatever. Let's use some easy math here. You got $500,000 in this thing.
Yeah.
But for the last 10 years, you didn't know about this backdoor strategy. For the last 10, you've just been making non-deductible contributions.
Yeah.
Which... That's what they say. They're like, you can only deduct it up to a certain income limit.
Right.
But you can still put money in it.
That's
we just
right.
don't give you a deduction for it.
That's right.
Thanks a lot.
Yeah.
So anyway, what you're saying is you can put that into a Roth, and potentially it's going to be tax-free going into the Roth.
Right, and by put it in, that's called a conversion. You convert it from the regular IRA and convert it into the Roth, because you can't put new money into the Roth due to your income limits, but you can convert existing money. There's no limits on the conversions. So the way that would work in the case that you described is it would be done on a pro rata basis, meaning that some of the money would be the traditional deductible IRA money and some of it would be the non-deductible after-tax money. Upon the conversion, a calculation is done and you would owe tax on the piece that's never been taxed, but then the remainder part, that after-tax part, that part would be tax-free conversion.
See, to me, that's a big deal, and I think maybe there's a lot of people out there that don't understand that piece.
Yeah.
They just understand that when you move it from an IRA to a Roth, it's a taxable event on
Right.
100% of the money.
Right, and that's not the case as long as you, have been filing your tax forms, your 8606, and keeping records and things.
Yeah.
You are eligible to convert that after-tax money on a tax-free basis to a Roth.
I'm wondering if that's what guys like Peter Thiel did. And
Well-
didn't Mitt Romney do something like that as well? Where they built up these these Roth IRAs.
Yeah, so Peter Thiel's story...
He's got like $5 billion in that thing.
Yeah, I looked that one up, and he only had a couple thousand in 1999, right? But he was...
In 99?
Yeah.
Not that long ago.
No, but what he did was he was able to use his Roth to purchase founder shares in PayPal, and then 3 years later, there was a sale to eBay, and values went up quite a bit at that point.
Okay. So that's a super strategy.
Yeah. I mean, we would call that penny stock at that time, or less. It's less than a penny, 0.001. But the reality is that strategy is not available to the rest of us.
Yeah. Okay.
As a founder, he had founder shares, and then Mitt Romney was at Bain Capital, and he was able to contribute to a SEP IRA in order to get his IRA to be, a decent size. I remember that in the news in the 2012 presidential campaign.
But then is that what he did? He
I don't have anything about Roth on his.
Oh, I thought he. Okay.
Yeah.
Okay.
Yeah. So I don't know if he converted or not.
Well, we got to look this up. Maybe we'll bring some examples next week of some billionaires that did it.
Right.
And it's like, okay, how did he do it? I'm going to do it like that. But this is a great way to think about it, and this is a strategy that most people don't know about. It's not talked about for sure,
right?
But I think it's something that could help a lot of people, especially those high-income earners that are saying, "Hey, I want to get it into a tax-free, situation." But I didn't know that this even existed.
Exactly. So if you're high income, you have the opportunity in your IRA or 401k to potentially add some additional money to your retirement plans.
Good stuff. You got questions about that, go to patrickmcnally.com. You'll find my calendar on there. Just schedule a simple phone call. Would love to help answer any questions or guide you down the right path there. Anything in all retirement, you got Social Security questions, Medicare questions, anything like that. We would love to help you. And if you want a copy of that checklist for your taxes, you can go to the website and just find where my email address is. Send me an email, say send me the tax document. You can go about it that way too, since we're out of time here. And with that, I'm going to say thank you, Rick.
Thanks, Patrick.
Thank you, Kelly. And thank you for listening to Retirement Lifestyles with Patrick McNally.